Great. I'm laughing at Kenny. That's hysterical. Kenny's like a 1% bounce after 30% drawdown, and we are so back. Markets acting like they don't care that tomorrow's Nvidia's earnings. Maybe markets are expecting, let's say, a lack of guidance. Let's go ahead and check it out. Tomorrow we have after the bell Nvidia earnings, and the estimates here are for a bombastic quarter, and let's see if they deliver and what their forward guidance is, and more importantly, how the market reacts to it. I want to start off today on the charts. I want to start off with Bitcoin, and we're looking at it's a throwback, right? The most important line in crypto. Those of you that were here back in the day remember the summer of 2021, and I threw in the most important line of crypto that we needed to recover in order to. That was a 50% correction at the time. Y'all getting rocked here on a 30% correction. I wonder if there was no like 4-year cycle belief if so many people would be so bearish right now. And maybe they would be. Maybe simply losing something like a weekly 50 SMA would cause people to become bearish and think that the bull market is over. I don't know. I just wonder about those things. Either which way, we are currently testing, and we have the Kenny bounce off of a very important structural trend line. And the reason I say that it's important is because that we have held it for the last 2 years. We have held it in 2023. You can see that after the intern leak. The intern leak was that famous leak out of the SEC that the spot ETFs were about to be launched. And then off of that, you saw the front running beginning for what was the eventual launch of the spot ETFs. After the launch, so we've confirmed support down over here after the intern leak. And then we had the launch of the spot ETF, and then a major shakeout. And you can see this is where we bottomed right there onto that structural trend line. And then over here in the summer of 2024, we had the Japanese yen unwind, carry trade unwind, and markets were rocking, and we also spiked down into that line. Here we are again, and it's an important line. If you look at it from this perspective, sometimes you invert things and it gives you a different look. And you could say that if you're trying to pick a bottom here, it's inverted. So if you're picking a top and you were to break down above this trend line, I mean, at that point, I think that this thing has a lot of empty space, and there's a good chance it's coming into that, 75 right now. This is all variable. It's an upward sloping trend line. So here, downward sloping, 75,000 into a deeper pocket. If you look at, so I don't know that this holds or not. I mean, that's not as important as having an idea to manage risk off of. But if it doesn't hold, then I'm going to go ahead and say that, well, obviously, Captain Obvious over here, the drawdown is going to be larger in duration, and likely the time to repair will be as well. There's a lot of moving pieces here. I saw yesterday, JP Morgan desk is saying also something that we were tweeting yesterday, that, listen, this is basically a repo. It's not a crisis. It's basically the market pushing for the Fed to have to come in and be more accommodative. Fed already knows this. Fed has already plans in just 10 days to wind down QT. When they do, that's not necessarily, it's only $5 billion a month of QT. That's not necessarily going to come in and provide liquidity for Bitcoin to bounce like a V. And more importantly, it's when they begin that balance sheet expansion and the pace of it that's going to decide what happens here. And again, it should be tech first. You notice that Bitcoin here is, we were looking at this wedge that it broke down out of, which is positive in the sense that often when you see a breakdown like this, that is the capitulation, but you need a bounce above the bottom end of that wedge, which I'm calling an underbelly. That's the first thing that you need to have any sign of an early recovery taking place. A bounce, the Kenny bounce off of an important support is nothing yet to get excited about. Um, we need a little bit of repairs. This is aggressive. This is the earliest repair I could see into the market. You could see that Irene is also has similar price action occurring right here. Let me just jump over to it. And you could see that we were looking at this yesterday, and I wrongly, I was like, listen, well, rightly, I was like, this one I would wait for the outer edge to break out. And you can see so far it's forming resistance, a break above $50.20, 25 cents, and it's on. And I think that, again, I think that tech should lead. So this is where I would be looking. And you could see just, a 50% bounce retracement from this move down. That's a quick 20% take. So that's something that I think could, well, I'm watching it here. Got eyes on it. And but again, was this the better entry on the breakout of the underbelly? And it is by a couple of dollars, or $1.50. It is. And but nevertheless, the caution maybe is warranted. And you know what? This is for sure. Know what your risk is. Nvidia's earnings are gonna have an effect on the market. I'm not sure offhand what the implied volatility is for tomorrow's move at Nvidia. Historically, it's been pretty substantial, about 9%. So Nvidia here, market is going to react. Thank you for lighting up the thumbs up button. I really appreciate the love and all of you. Glad to be here with all of you as always. A lot of people have turned very, very bearish on the markets. I'm trying to figure out why. I remain with my bullish posture into 2026. A lot of people are worried about the pace. I wonder if the cuts here are a combination. I wonder if this is, and it's variable. We got to keep tracking the data over here. Jobs numbers have everyone spooked. I'm wondering here if this is actually a cut into normalization that's going to have soon a sprinkle of panic cut on it. And that it might. So we're going to be watching out for that. Anyway, so jumping back over here, let's continue looking at the charts on Bitcoin. The major and first repair we need is aggressive. There are no black diamonds here. There are no double black diamonds over here. This is a conservative line of a repair. This would be over here, if you could see, and I can't see it. So I'm going to go ahead and just edit this really quick. And then I'm going to find a flow because you guys did light up that button and that gets me amped up. So I'm going to find a way to get off these dots. There we go. You got to be able to have fun. You got to be able to laugh, and you got to love life. What are you grateful for? Let me know today in the comments, just something that's going on today that you're grateful for. I'm going to erase this in 1 second. That's a black diamond. And then you have over here what would be a double black diamond. Not like that, Jord. Let me know what you're grateful for. Yeah, that's it. So you got a black diamond, and it's not even, this is a wedge. So I'm not looking for black diamond. I'm not looking for double black diamond. I'm not looking for experts only. We're bouncing off of structural support. It's very clear. We want to hold that. Like, this is a very important line that the market has held for going on 2.5 years now. If that doesn't hold, if we give up the bounce off of the intern leak and the launch of the spot ETFs, major global carry unwind, and then again, even the April lows off of the tariff tantrum, that held a higher structural support. We gave that up. We're testing the lower one. We don't want to lose this one. If we lose this one, there is going to be further deep side pressure, and be ready for it. This is, again, just a parallel channel that I've drawn in over here. This is coming off of the low from February. the low from July, the summer. Again, that's also the Jap. And you can see it's parallel with the two top touches. We're currently testing that support as well. So it's two different looks, giving the same confirmation of what's taking place. Very important to watch over here. If we lose that support, a lot of people might be looking to, although it's a de-risk event, for a de-risk event, what that means is, you know what, if anyone is on leverage, CTM doesn't use leverage. If anyone's on leverage, make sure you go ahead and tighten that up. Like, get out, like, no. And if you have maybe a loan against your Bitcoin, pay that back. You don't know what happens next. Go ahead and tighten up that loan, LTV. Here's a look if we were to lose that level, right? So I'm going to just jump down first over here, and I'll start over here with structure. And we have over here, so I'm looking left. That's interesting. Actually, Brad brought this up yesterday, and he's like, imagine taking out the April low, and you can see the April low is right over here, right just below 75,000. It's 75,000 is above or just above into that resistance that started the consolidation prior to the election and then the major breakout. Some people say, oh, well, we've lost the high since the breakout. I don't. Anyway, if we were to take out that low and then come into this resistance, check this out over here. That I imagine that a lot of people have a stop loss over there. It looks like an area of interest. I think that would be for me personally. I don't know about you. What we do here is we try to take a look at the markets together so that you're able to go ahead and firm up your own beliefs about how you want to execute in the market. For me, if we were able to test that area to take out that low, that would be an area that I would be looking for a DCA, a long-term DCA. That looks like a really good event. And you could imagine, I can imagine a world over there if we came into that structural support and if stops are there and taken out. And if someone has a liquidation map, go ahead, could you let us know at 75K what type of stops are sitting over there? And you could imagine, a wick down into something like, $69,000 in that area, 70K. That's really where the support is not up over here. We talked about previous cycle support, and you could see that there's, coming all the way down to 66, which is well above 55,000 Bitcoin is cheap. And then 55,000 Bitcoin is cheap, as you can see, is above the orange line of what is the bull market breakout. And I don't think that we're going to see that, regardless of what happens and how long it takes to repair this current situation that we're in. Is Nvidia going to have an effect on the market? Of course. I, you know what? I was thinking earlier, I was making a drip coffee and I was thinking to myself, trying to always understand other people's views. And I know there are a few, it seems, and guys, I live in a kind of a bubble. So from what I gather, a lot of people have turned, even my friend Caleb turned bearish on the market, So look, I like and I respect everyone, and I like to hear everyone's thoughts. And then my friend Ben, he's bearish, bear market, 2026. I don't obviously, like, from my perspective recently turning bearish on the market. Not like I didn't hear anyone. I thought what I heard over here from a lot of people was that there's gonna be one more high up, and that's going to be the highest high, and that high has not yet translated. 2026. I think this thing continues. I have not changed any of my view whatsoever. Um, and so I'm thinking about, and then I'm wondering, I get the 4-year cycle lens that people look at, and then I get the Fed is cutting, but you have to ask yourself, most people just think blindly that cuts are bearish, but it matters. It matters. Is it a panic cut? Is it normalization? Is it into a recession? And then I look further and I wonder, Warren Buffett, major investment into Alphabet. He believes we're in an AI boom. not a bust. You got Michael Berry, bearish on the market, which has been the most bullish indicator for the last 3 years. He's the guy who told you at the bottom to sell, and he's been selling the whole way up since. Man, no, but to me, the massive build out that is going to continue is incredibly bullish. Incredibly bullish. It's hard for me to get to be bearish or have a bearish view. There are other things, of course, that are very bullish for me. That includes the Fed going from a tightening stance towards easing. They're in the process of beginning to cut rates. Dovish board to be in effect in 2026. We have the big, beautiful bull, which is ultra stimulative in 2026. And then, of course, we have the Fed not only stopping QT, but beginning that balance sheet expansion. The only thing that would have me change my mind would be it's not like thinking forward. How are they going to power these data centers? Matt, did you see, you all know macro hard? Forget Microsoft. Macro hard, Elon looking to go ahead and he's building a new venture where AI designs and manufactures. Did you see yesterday that Jeff Bezos is doing the exact same thing? Yeah, you guys think that in just, you know, call it let's call it 4 or 5 years, that manufacturing is going to take place in China? No. Do you see what's going on? It's hard for me to be bearish. I'm super super bullish. Um, so here we are. I don't know, just having a little fireside chat with y'all today. We're having so much trouble figuring out here what direction here we're going with the candidates, Ace. But we're getting there. We're getting there. Bullish on V4 is a good thing. Um yeah, I don't know. I don't really know what to say about that. We're not seeing refinancing being extended to 5 years. Well, hold on. Let me think about that for a second. What's happening and what's been happening now for the past few years is short-term duration is being rolled over to finance the deficits. If at any point you were to see the Fed have to return to the money printer to outright QE, and some people say that they've run the numbers and it's going to be by the summer of 2026. I would be surprised by that. That seems a little bit early, and I just assume that they're going to try to kick that can and extend the cycle as far as possible. And yes, sharper, quicker cycles, but I don't know that it's going to happen that soon. And if it were to happen in the summer of 2026, and they were to briefly get rates down towards zero, and then the government was, why rates are low, able to roll over a bunch of long-term duration, then it has become this one was a 5-year cycle. And Raul is perfectly on point. But I don't know that they're going to be able to roll over longer duration within a 5-year window now. What would be a 5-year window? And I just don't know that that's going to happen. And they're kind of stuck as Luke puts it. He puts it that like they're on this conveyor belt and they're stuck on it. And the further it goes, the harder it is to get off. And I can't imagine a situation outside of yield control curve and they're buying the long-term duration themselves and just issuing more. I can't see them getting off it. So that 5-year refinance extended to five is it going to be extended to 6 years? And then, if there is not some type of event that causes outright QE, is it extended to 7? It's not precise like that. So you can't have that type of, let's say, deterministic view of what the length of the cycle is as you're pivoting now. But anyway, bananas. It's just all bananas. This is it. Most people are zoomed into the daily chart. Yeah, we are zoomed out over here. I think that, I could just do something simple and I could say, well, We have higher highs, and this stalled out over here. This stalled out over here. We do have lower highs, and which is weird. Check this out. This is weird for me. Like, this is a lower high, but at the same time, it's also a lower structural high. So that's not good. I'm not looking at this market and I'm like, this is great. Bitcoin is in the midst of a 30% correction. No, I don't think that at all. However, I'm looking forward, and I think that, when you listen to people like Stan Druckenmiller, he's like, you gotta see where you think the market is going to be 6 months from now. And I assume that a lot of people think 6 months from now we're going to be in the midst of a recession, maybe even like a deflationary spiral or something like that. But I see reacceleration. I absolutely see that, and I see a more accommodative, let's say, monetary policy, and then I see the I don't even know what you call the bill, but I see government stimulus coming in over here. And I don't think this is a reason to form a view, but it's not like, do you think that the current administration is going to do everything in their power into midterm elections to be as accommodative as possible? Or you think that they think it's a good time to come into a recession? I don't know how much control they have, honestly, but I think that they'll do everything in their power. It's high or low. If I was saying anything else, I'm glad you all got me. Um, oof. I can't stand when people who are missed what shouldn't be missed. Ugh. Automation's a beautiful thing. Bitcoin bull runs looking good at this particular point here. Safe, right? So this is the only open trade for stocks and equities. Bouncing today over here, we have good old strategy bouncing about 5% or more. Still currently holding a short, getting ready to lock in profit. If you look down over here, you can see that we're getting a lot closer. Still currently 20% into profit. And everything else here for stocks is just completely sidelined, 100% in cash. And if you didn't know that the sidelines is a position, it's beautiful here as momentum has waned to be safe and on the right side of the market. Same thing with buy side boost. Comparing overall returns when Bitcoin was at its high, wasn't the best. Now it's substantially outperforming Bitcoin, and that's important, right? For sure, this year, I th- I think this is one of the toughest trading years for both stocks and crypto, and probably looking back, it'll be because it was mid-cycle consolidation, and that's my belief. And looking back at it, guys, I don't compare ourselves to anyone, because we're here to do what we do in the markets, and our expectations are actually higher than everyone else in the market. The truth is, though, Renaissance Technology, the best performing quant fund in all the history of the markets, has down 14% and having its first losing year. It's not an easy market, and it is what it is. You still got to be able to navigate through it. And then we have, of course, some open shorts over here. Ethereum is 3% into profit, and Cardano is 14% into profit on some current open shorts. A Master of Whispers, the only thing that caught my eye over here, and look, I think this is a really good setup. I love first of all, the sharp angle of descent on this wedge, and then I like the breakdown, and it's a clear underbelly. This was a little bit of aggressive for me. I get, if I was aggressive, probably was the way to go. a breakup out over here, it seems like a good trade to take in so much as that your risk is managed. And by the way, just to line this up of what exactly is a good risk, so you're looking at $46 as stop loss, and I think targeting 60, right? I know it's a whole number, and I'm just pulling, it's close to 50% retracement. That would be a place either to if it happens quick, take it all off. If it takes a while to go there, manage the trade. We'll talk about it in real time and live time. I think it's a really good risk to reward. And I think there's a good chance that as we look at similar setups between Bitcoin's in a descending wedge, notice it's not as steep, the wedge. It's a little different. And I think that there's a stronger chance that Irene would have a 20% quicker return than Bitcoin. I do. I think it'll be quicker because if it's breaking out and it's on good news tomorrow from Nvidia, there's a chance that CTAs have been mega sellers in this down tape, and then all of a sudden people are like, "Oh, it's an AI boom. It's not a bust, and there's an opportunity there." Is it speculative? Highly. Is it a really good risk to reward and a setup that makes sense? I think so. Could it go could it be a stop out? Of course. Of course. MBIS. I'm not familiar. Just looking at the charts here. That's all I got, and that's all I could do. What's cool about that is first of all, um, do you see like the liquidity grab right there? And then I was lining it up first of all on the outside, and then I was just trying to see if there's any structure to it, and it looks okay. It helped me see the liquidity grab. After that liquidity grab, if you were watching this and you were smart, and this will help you going forward, I think like to go off of the high from before the liquidity grab, and that is the entry, is fantastic. Great. I mean, I'm late here, you know what I'm saying, Alexei, but great spot, and that thing is coming out hot. That's how you do it though, and that is a real, like, you start on the outside, you connect the two outermost points of resistance. You see if it's structure or not. So I'm coming down over here, and I'm checking with my eyes on these two over here, and then I could see that it was running up there. It was structure. After putting that line in, I see the liquidity grab, and then so you have to be able to do this in real time, not after. And then if that were indeed like taking out this, you move this towards the local high there, and that's the entry over there. That's a great setup. AI infrastructure company. I feel like Warren Buffett. I don't remember when back on the IPO of Google and everything going on. He's like, I don't understand the tech, and which I don't know what AI infrastructure is. Like, I guess I have to look into what exactly are they like. Are they building out the data centers? Do they provide the chips? Are they providing the cooling? Are they providing the water? Are they providing the energy? Are they providing the labor? I don't know. And I should get on it. You guys turned me on to it. You listen to the Moonshot podcast? I like it. I think it's a great one. I think it's one to listen to on a regular basis. It's now inside my loop. And one of the things about it that's so great, so positive. So positive. Thank you so much. This is I was asking Rick, grateful for joining this community to help keep my head screwed on straight during the turbulent days. Yeah, thank you for hitting up on what you're grateful for. I'm grateful for all of you and this time that we spend together. Um, I don't know. Like, you know what? Timely lesson for a lot of people that buy and hold works when things are up and to the right. And look, if like if you're betting on Bitcoin and you look around and you say to yourself, all right, let's see, has the adoption continued? It's accelerated. Right now, are there outflows from the spot ETFs? Yes. Is that normal, depending on which way price is going? Yeah. Is there significant amount more money in those ETFs than there were during the April low, during the tariff tantrum? Yes, there are. That's good. Are the treasury companies buying Bitcoin? No, they're underwater now. That's not working out the best for them. Saylor's trying. He's trying. The pace has declined, but that makes sense. But at least he's able to buy and continues. Um, does that make sense that on a 30% drawdown, you would start? Or one question that I have, I don't know if anyone has the answer. Like, are the wallets, when I say the distribution, I'm not talking about short-term holders who are just completely underwater right now, as you would expect on any 30% drawdown, and maybe they need to get washed out. Maybe a lot of these untested short-term hodlers are who just bought at 115,000 are like, when I bought, I didn't know what I was getting into, and I'm selling now, and that will loosen things up. But I'm more curious, are people who have holding Bitcoin for 7+ years, are they still distributing with Bitcoin here at a 30% drawdown? And if they are, and at the same pace, that's worrisome. That's not good if the demand from treasury companies, spot ETF inflows is waning, and that massive reign of distribution continues. That's something that would need to even out. You would need to see less selling and more demand coming this way to see price, beginning to rise. Again, it's going to be a minute before liquidity actually, which is being pulled out and sucked out. I'm glad we touched on that really quick. I have to tell you and just hit up on this really quick with you all. And that was, we I thought that you would see the TGA, the Treasury, US Treasury General Account, after the government opened, start moving this way, and that's like very accommodative for liquidity. It's not. It's actually holding flat, and I wonder, are they doing that on purpose? Are they trying to get the Fed to be forced to pivot and be a lot more accommodative with liquidity, a lot quicker? They could be. That could be happening. But if you look at to next week, there's no new issuances on the horizon. And during the holiday week coming up, so far the calendar is empty, which means, thankfully, whether or not they're being accommodative by draining this, at least, and if they do, that's going to be very, very, very bullish for risk. Don't forget, coming into this event, that's why I had the bears running in the background for so long. I thought it was going to be a headwind, and my timing was wrong. They were able to raise $900 billion dollars, and we were making all-time highs up until Powell said, well, maybe that cut's not on the table. And then, finally, Bears definitely getting their chance. And we had the first technical breakdown occur yesterday with a close below the trend line. The first ever since price made the new all-time high after the April recovery. The first technical breakdown, and definitely in effect right now. There's a lot of wicks down here. Have there been buyers, and is there big buyers down there? I don't know. Maybe. Um, Listen, we're gonna have a clearer read tomorrow after the bell with Nvidia's earnings. But back to the TGA. maybe that's what they're doing. So next week I think it's kind of flat. At least, even if they're not being accommodative, at least they're not pushing out that pressure. Uh, I guess they want to be able to enjoy their holidays as well. Mhm. Yeah, this is a great question. So Solana was definitely ripping earlier. Let me check what it is right now as far as up on the day. I saw it first of all 7%. I saw it like, markets was still red, Bitcoin was red, down percent or two, and I saw Solana like up a couple of percent. And then as Bitcoin recovered, Solana's up 5%, 7%. Why is that happening? Right? And then let's just look at Solana over here. And is that a similar setup? So first of all, that's very far away. And my eyes were attracted to this first. And I just want to see if that's structure on the downside over here. And I don't think it is. I'm having trouble finding anything. So you see this? I'm gonna go off of this. I'm gonna see where this leads on the upside. Nowhere. But is that structure? So now I have two touches over here. That's a little bit better. Let me delete this. Kind of. I mean, those two outer touches actually touch well. It's not, I don't know if it's perfect, but it's not bad. It's actually pretty good over there. And that's great. So finally, so I found it and found it off of this little hint, right? So bringing it back to that though, is that the underbelly to be watching? I don't know. I don't like it. Um, why is Solana pumping first over Bitcoin? Is it something as simple as market cap, in so much as that, people saying, Solana here down 50%, it's time for me to nibble, and just a little bit of buying in comparison to the amount it would take to Bitcoin moving? I don't know. I don't know, and I also don't know, out of these moves. One thing that's scary to me is that Bitcoin dominance in bear markets really gets wrecked. And that's not a good sign. I know. Let me pull up a chart of Bitcoin dominance over here so we could look. So this is a major move down from 60 to 32, 50% correction. You can see Bitcoin dominance going down from 47 to 40% on that move, right? So I think it's really bearish seeing Bitcoin dominance come down over here. And then over here it goes from 48 back down towards 40 as price comes down. I don't know, because I'm not aware, off a bounce, not a recovery, but a bounce. Do alts lead, and then does everything get smacked down? Or if Bitcoin is leading out of the recovery, is that generally more bullish? I don't know, Deep Power, and that's what would need to be known in order to be able to, for me to give an opinion about what I make of Solana leading here and bouncing. I don't know if it's bullish or bearish. I don't know. People pointing towards the ETFs. I would love to get it. So, fun session. I would stay here forever, but I have an appointment, so I'm gonna cut this one a little short. Tomorrow we'll be back at it ahead of Nvidia's earnings, and then there we are. Thursday we're probably gonna go an hour earlier than normal, but I'll let you know well ahead of time. For now, holding significant and major support. Here's the parallel channel tested. If you asked me in October at Bitcoin 124,000 if I thought we were going to be testing down here a month later, I was absolutely not. Absolutely not. But, here we are. And we call it a major technical level for a reason. If we break it, then likely there's further pain. The reason I called this one is a throwback, the most important line in crypto. If we break this line over here, this structural support, and it's clean and it's clear and it's had some major, major, major events to cause a touch into it, that's bad news. Does that mean to me that we're not making a new all-time high in 2026? No, it does not. Yeah, is this a dead cat, or is this actually, are we about to see, nothing's changed with the S curve. Are we about to see end of the year seasonalities be end of the year seasonalities? What's interesting about, come back to this chart in 1 second for you to get a look at it. What's interesting about that chart is this over here. And it's almost like coming back off of the 1998 track and this current one, and they're both important in so much as that they're both similar in out of a 20% correction to have the highest tracks out of them out of any other, and they also have in common that their prior 2 years had a 20% gain on the S&P 500, which is very rare. It's only happened 3 other times before this time. So outside these two other times, and look at that correction that it had right into here. So into the end of the year, here we go. No, is that why Solana is bumping because a little Kramer action? So as far as the S curve is, nothing's changed whatsoever, and here we go. We'll be back at it tomorrow, everyone. Everyone, if you're new here, welcome. This is Jordan with Conquer Trading and Investing. Make sure you're back tomorrow with us. If you're not, I'm grateful for you. Everyone have a beautiful day. God bless you.